And I ended up having about 35,000 USD worth of payouts that month. I've had a couple of $6,000 or $7,000 payouts with you, and that's probably the top end of it. Over the last kind of 12 months, I've been averaging maybe 8 payouts a month, 8, 9 payouts a month. I lost about 15 to 17 grand, about 17 grand, I think it was, in about 2 days. And then I was like, right, I've got about 15 grand of payouts lined up.
Like, trading's never easy. Definitely never easy, but I think futures does give the average retail trader at least more of an edge, just because
I started seeing a bit more profit, a bit more profitability. I've never dabbled with prop firms at this time because, you know, we're talking kind of 7.5 years. You've got bigger drawdown limits. You obviously have a consistency rule, but I'm actually 40%, I think, is a perfect balance.
How do you balance work and trading?
Like I say, having more accounts and being able to stagger those and get multiple payouts a week. US stock indices can be brutal, but also quite profitable. And NASDAQ is a bit more, offers more opportunity, but at the same time, when something comes quickly, it can also disappear pretty quickly as well.
Why alpha? Like, what brought you to us?
I think,
All right, my Alpha Futures family, welcome back to another trader interview. I have one of our traders here today that's done a little bit over $26,000 with us in payouts so far. Go ahead, introduce yourself, let the audience know who you are, where you're from. Go ahead.
My name is Idris. I'm from the UK. I'm 29 years old, 30 in June. Been trading for about 10 years. Come from CFDs, and I've recently, probably maybe over the last year, 18 months, started, testing the future space. Started really enjoying it.
Awesome, man. So we're similar age. I'm 28. You've been trading a little bit longer than me. I'm not close to the 10-year mark yet. I'm like going on 7 years. I guess talk to me about what got you into trading. How'd you find it? All that good stuff. Because obviously 10 years before 30, that's some really, really good experience. So go ahead.
So my background is, by trade, I'm a QS, so quantity surveyor in construction. So whilst I was learning my degree, I was actually in college before my degree. My friend Matt, a South African bloke, got me into trading. So I was following his group when I was about 19, off the back of my degree. And then as soon as I finished my degree, about 21, I kind of took it a bit more forward, a bit more kind of, basically replacing my university study time with, trading and stuff. So again, same as everyone, made quite a lot of money off Litecoin, I think. And it was very cheap at the time, but leveraged, made about £400. And to me at the time, really, really good. I think I was earning about £1,200 a month at the time. So to make £400, again, you can guess it. What's coming next? The next week I lost it all. So, but it's the realization, isn't it? It's the realization of knowing that, if you can strategize and systematically do something, manage your risk in bits and pieces, over the long haul, you can see success. So, after about 18 months, I'd probably say I started, not losing money as such, but I could bridge the gap between, losing money and breaking even. So like from that 18-month period, I knew that, I've got skin in the game, I've got experience, and now it's a matter of like fine-tuning strategy. So I was kind of, if you think of a strategy, you've got, entry confluences, extra strategies, you've got times that you're trading during the day, what session you're trading, the pairs that you're trading, market correlation, market confluence, all that kind of stuff. And it's like, risk to reward, when you're going to start scaling out of a position, do you scale into positions? So I was kind of taking, one of those elements, and I was trying to just fine tune that element instead of, jumping and changing the narrative completely. I was, working on, instead of 1 to 3 hours, I was looking at 1 to 2 hours. And then I was changing, or, closing out 50% at 1 hour and then closing 50% at 2 hour. And then I was, instead of leaving it at 2 hour, instead of closing it out, I just try my stop loss. So, I might be able to get 3 hour or 3.5 hour. So just, moving things around like that. So after the kind of 2.5 year mark, I started seeing a bit more profit, a bit more profitability. Never dabbled with prop firms at this time because, we're talking kind of 7.5 years ago now, kind of 2018, 2019. And kind of at that point, I was trading with like IC markets and stuff. And I think I had done my first property flip and I had a bit of a cash injection. So I dumped about 25 grand in, and I was making okay money. But at the time, I was following a few people that were going quite heavy. They had £15,000 accounts and stuff, and they were, trading kind of 1.5 lots on gold, and they were making some really good money. And I kind of followed that a little bit, and then started focusing on gold. So I moved from the Euro USD, GBP USD, started looking at gold, and only in the last kind of 4 years, I would probably say, I was looking at US 30, NASDAQ, and obviously gold still in the CFD space. And then over the last maybe 18 months to 2 years, I've started trading futures. I got hooked on Project X. So the tech that obviously Alpha have, it feels like you're like really using a professional platform, and you've got other things, built into this platform that give you an actual edge. So like a benefit. And being able to, I can't tell you how many times across different firms that being able to lock yourself out and stop, throwing profits back into the market. People will always get the temptation to make more and, to scratch that itch. They've made money for the day, but they just want to make more. They just want to, stack it up. The Project X, that tech that Alpha has, you literally could just lock yourself out and then resume trading the next day. It's obviously trading on tilt, throw your profits back. If you've got 3 accounts with, let's say 150K with Alpha, you can trade one. You might lose a bit of money on one. You can lock yourself out, go to the next one, make a bit of money, and then lock yourself out and then go to the next one. You might be profitable at 2. You might be profitable at all 3, or, you might lose all of them for that day. But the point is, you're kind of almost hedging yourself within the same kind of portfolio of accounts. So, if you do end up blowing one account, then, over the 14 days, you might see a payout from 1 or 2 of the others. So having multiple accounts using the same thing, the same platform, certainly really, really helped me. And having everything, built in, risk management, lockouts, I think now you can use lock yourself out of certain pairs and stuff, can't you? There's loads of different things that Project X Tech can, bring out, and off the back of that, Alpha obviously, deploy as well. So it's really, really good. So a bit about my story. So, 10 years moving from CFDs to futures, and, I don't see myself really. Again, once, I probably will end up getting some more accounts of ACG, the, CFD side of things. I'm always in their Discord and I've always got my eye on it, but I certainly, the focus is certainly on futures at the moment. And I'm sure we'll talk about Alpha Prime soon, in this call, but, putting a bit of a strategy together to, really optimize and grow some sort of portfolio with the future space is the next aim. And I think, Ben, you'll probably agree, there's a strategy to trading, but there's also a strategy to kind of growing prop space and, growing your portfolio, but also, across different firms and within the same firm, but then also, looking to take that next step up to, Alpha Prime, which is, opens up more doors, isn't it, in terms of risk, in terms of, how much you can trade, in terms of payouts and, the, other endless opportunities.
Yeah, definitely. I actually really like what you said there, talking about trading multiple accounts, because it's become really popular in the space, right? Just to copy trade as many accounts as possible. And that's great if you can stomach the amount of risk you're actually taking on per trade, right? For most traders, though, I like that you were saying it's almost spreading your risk across multiple accounts, meaning like you said, trade one account. If you breach it for the day or whatever, hit your DLL, move on to the next.
Yeah.
Rather than trying to take on, right, like a $500 risk across 10 accounts, right? That's obviously $5,000 worth of risk, but you only see it as the 500. But if you breach 10 accounts, that's a lot of money to lose at once, which I think just too many beginner traders are trying to jump into that. It's obviously incredibly powerful to do. We've seen millions of dollars paid out that way. That is really exciting. But you have to ask yourself, am I in that place as a trader to actually be able to handle that? And I don't think enough people actually ask themselves that. So I really like that you said about splitting up the account. That's good.
No, absolutely. I think also you've got, people have different, amounts of money behind them. Some people are, fortunate that they've made quite a bit of money through trading and they can afford to, throw a bit more money at it and, try and fast track themselves. But, people always say, work in percentages, work out how much money you're making from these prop firms, and then, make sure you're not reinvesting above and beyond what you're actually getting paid. Have a bit of a strategy, don't go all guns blazing and stuff. And, Alpha, obviously, you've got the $50,000 challenge. You guys have awesome discounts and stuff as well. I'm pushing for the 150Ks at the moment. And normally I've actually only gone for the 100Ks. So I think it's normally $229 with a 30% discount. It's like 160 or so, which equates to about £125. So, when you if you can get, $6,000 worth of futures times 3, you've got $18,000 worth of effective buying power, with all the benefits with all the tech and bits and pieces, it can go a long way. So, there's certainly a strategy to it. And, I'm looking forward to trying to, take it to the next level really, and kind of get my eyes set on that target, Alpha Prime. I think that's the goal for everyone, isn't it? To really kind of move past that, qualified status and, almost make sure that, get to a point where the sky is truly the limit.
Definitely. Yeah. And that's the thing. A lot of people look at Prime, right? Because like you just said, you get 18,000 max of trailing drawdown, trailing buying power. And that's a lot of people, right? Like they're immediately like, they've gotten too used to hearing about like the multi 6-figure live accounts elsewhere that you only get a $3,000 daily loss limit on.
Yeah.
So you do the math there. They're only funding the daily margin, right? Like they're not giving you 300 grand to trade that day. They're funding your daily margin of 3,000 loss limit, which is fine. Yeah. But we're doing the same thing starting at a 10K account, right? And that's only the starting point. Like we already have a couple traders actually that have been scaled up past 20,000 That's static 20,000 drawdown, like not trailing the way you had 18 on sim. And we're paying you those monthly checks, and obviously you're uncapped on payouts as well as scalability. And the nice thing is too is just we try to give you more freedom on live too, because I know we were just talking about it. But like some other firms still have rules on the live accounts, like let's say like 5 profitable days to pay out. None of that.
Yeah.
Like you're a live trader, we want to be making money with you. We want you to make money for us, and we continue to grow together forever. That's how a prop firm is supposed to look, right? Like that's kind of the dream that we were all sold 3 years ago when this industry started popping off. That's what got me into it anyways, was like they'll continue to scale me forever and we both make money. And obviously the system got kind of broken somewhere in there when it became sim only and traders became a liability to the firms. That's not a firm. You know what I mean? Like if the traders are a liability, it's not a firm. It's a profitable business and that works. And if customers are happy, great, like understand what you're buying into. It's not a firm though. Like we kind of have to stop using that word. You know what I mean? If traders are only a liability, it's no longer a trading firm, which that's what we're obviously trying to move away from. But I know you said you came from the CFD space, right? I'm going to assume that's how you found Alpha, was through ACG.
Yes, yeah, no, absolutely. So I trade quite closely with my friend Amir. We speak every day. Never met the bloke, but maybe 5-6 years. It must be maybe even longer than that now. 5-6 years, I reckon. We speak every day. We play Warzone and stuff together. We play FIFA together, and like he's very much in the ACG. Alpha Capital kind of side of things, trading CFDs, but obviously overlap. So he's looking at US 30, Dow Jones, Nasdaq, and NQ obviously in the future space. Obviously the copyright pricing is obviously very, very similar. How it moves and stuff. The charts and everything's very similar. Pricing is just slightly different. So he obviously is big on stock market open, US stock market open. I try and trade stock market close now. Just because, again, trading on tilt sometimes, it's very quick in and out, stock market open, especially over the last I think March time, April time, we were seeing wacky moves where that, 5% limit was coming into play. And, it was just a matter of, seconds, you could see 100 points. So tried to avoid that and just almost sat on the sideline for a little while. But, certainly, US stock indices can be brutal, but also quite profitable.
Definitely. So I know you said NQ. Are you trading any other? I know you said you really started with gold originally, but are you still trading gold on futures, or are you just NQ? What products are you trading?
It's been a little bit of NQ. I really don't actually trade YM, so I don't trade Dow Jones at all at the moment. On futures, I have a kind of personal account. If I'm waiting for payouts, for example, you've still got that itch to scratch, haven't you? So you chuck some money into like a personal brokerage and stuff, and then you obviously trade that and go a bit more heavy with risk with a smaller deposit. But then I'll look at US 30 and I'll look at gold also. Obviously with the recent gold bull run, knocking on the door to $3,500 an ounce, wasn't it? That was quite exceptional. I think we're about 32 something at the moment, aren't we? So certainly recent times has been crazy for gold, but I've kind of really just kind of focused on NQ because it's obviously with the contract and pricing is different to YM, obviously in futures. So you place one contract on NQ and you're looking at 20 lots equivalent effectively, whereas you say one contract with YM, it's effectively 5 contracts. So you've obviously got that kind of difference, but I prefer, I think, Nasdaq is kind of something that's almost what I find in between gold and in between Dow Jones. So Dow Jones being the most volatile, gold being still pretty shit hot, excuse me. And then, NQ somewhere in between, I feel. So again, I'll go through phases of, trading the same thing for a long time until I start losing money and something doesn't work. Then I'll do the same thing on just another pair. But certainly for, gold's maybe the pair, if let's say I made some money on NQ and I'm waiting for a payout, I'd then possibly consider moving back to gold just to get those minimum trading days, just to average out my consistency rules and stuff. I'm a bit more safe with gold, whereas, again, Nasdaq is a bit more offers more opportunity, but at the same time, it's, when something comes quickly, it can also, disappear pretty quickly as well. So you have to just be a bit cautious and, trade with a bit of discipline and strategy.
Definitely. So let's kind of talk about it. I mean, like we said, $26,000 in payouts with us. I know you said, QS background. Are you still doing that for work now? How do you balance work and trading?
So yeah, I basically for about 5.5 years I was self-employed. So again, doing my own construction projects. So I'm very much into real estate and stuff as well. I've got a few rental properties. We bought some land. We've updated the land, and we've got planning for like a commercial unit. My partner does like beauty and hair and stuff. So the idea was we were going to get her sorted out with these chairs, sublet the chairs and sublet the beauty rooms, and that would be her business side of things. We're actually looking to do quite a big move at the moment. So, we're selling a few things up, and, towards the end of the year, things will change quite a lot for us. But in terms of the QSing and stuff, I literally went back to it last year. And to be honest with you, I found, and I think we were talking about this before, when you are simply trading and you've got all the time in the world to, do things and look at the charts and stuff, it's quite hard to shut off. Whereas, you can make your money and you can set up your day. For example, I started working again back in July. Used to see how it was. I worked for a consultancy firm, quite local again, QSing. That's what my degree's in. Really, really good, really flexible. And the reason I took the job is because it can be managed around, obviously the trading side of things. So literally going back into work, I wake up in the morning at say 6 o'clock now. I do, updates and check out what I'm looking at for the day, my setups and whatnot. And if I don't see anything, I'll typically try and lock myself out of my accounts until, opportunity presents itself. And then I'll go about my day at work. I'll obviously squeeze my gym in at lunchtime, and I'll come home about 4 o'clock UK time, do a bit more work and bits and pieces with my own stuff, emails, admin, social content, and then I'll either go to the gym, go for a run, and then I'll trade stock market close. So I found having that kind of routine and discipline rather than playing golf 4 or 5 times a week, and getting tired. I was having naps at like 2 o'clock in the afternoon and stuff, and it wasn't good. So certainly I'm one of those people that works better under pressure. And when I'm a bit more flat out and I've got more stuff to achieve, you always find a way of getting it done within the time that you've got. Whereas when you have got all the time in the world, it's easy to just like let things slow down and relax in bits and pieces. So I found certainly my performance has been a lot better, because like I say, you make your money and you're onto something else. And obviously going back into QSing, I was trying to get a bit more clued up with like local contractors and stuff to obviously help deliver the project that we were going to do. So obviously it's coming up to maybe 9-10 months now that I've been working there. I'll probably do another few and then move on to the next thing. But we'll see how things go. Like I say, me and my partner have got some plans for the end of the year, so don't want to commit to anything yet, but things obviously change, and I don't really like to gloat before it's actually happened. You know what I mean? I'd rather just get it done and then be like, right, we said what we were going to do, or we said what we were going to do, and now it's here. We can spill the beans a bit of it. So yeah.
All right, cool. So where does this I mean, I know you're kind of probably feel like somewhere in between right now. You were self-employed for a while, now somewhere in between kind of entrepreneurship and not, right? Like, where did that entrepreneurship, I guess, kind of mindset come from for you?
So naturally, I think it unfolded because, again, I was into property. I was into, that's where more my, career background was. So obviously I made money doing some like, renovations and, residential property. So I bought my first house at about 20 years old, done some work to it, done an extension to it, and then refinanced it. I sold that about 21. And then I got a decent amount of cash come, into play. I then bought another place and I've done a bit of a refurb on that. I made 70,000 on that. And then the recent projects I've done at the moment, I think if I spent about 110, I made about 220. And I was basically using that cash pot to then, put 50% back in, but then fund other things with the other 50%. So, I'm scaling up my property in bits and pieces. I've bought a few rentals and bits and pieces as well, but I'll try and keep things in their own pots. So I treat, property generally as property. So I'll try and fund the next property venture with money that I've made. Obviously I've got XF, so I'll put it into something else like stocks or crypto or something like that. And, I'll rebalance those every 12, 18 months or whenever the time is right. But I think, the entrepreneur side from, the trading side of things was obviously, posting on socials and stuff. I kind of done it. And if you kind of look at my Instagram, I started in about 2016 or 2017, kind of 2 years into, my journey. So I kind of was independent for a couple of years and thought, before, all the affiliate marketers and bits and pieces came with their kind of bits and pieces in Dubai and their Lamborghinis and stuff of the, CPA deals and stuff, but it was quite raw. It was quite good. So, people were, there was a lot of value there, and I was in these focus groups and bits and pieces, these forums and stuff, and I was seeing what they were doing and how they were journaling and stuff. And I'd done that through socials. And then naturally people ask for things. Oh, do you do this? Do you do this? Do you do this? And I said, not really, but maybe it's something I do. And, one thing leads to another. And then, people reach out, companies, brokerages, prop firms, and, they want to work with you. And, I always document trading related stuff. So I don't like to go off on a tangent and post personal lifestyle and stuff. I try to keep it, trading related, because for me, it's more like I want to speak to people that are doing the same thing as me. I don't want to just sell them something or do something for my own benefit. And 80% or maybe 70% of my income comes from, my actual own trading profits. I've got a bit of a kind of a YouTube crash course that I'm looking to release, which is going to be free to everyone. And, over the last kind of 12 months, I've been averaging maybe 8 payouts a month, 8-9 payouts a month through various firms. And, not $20,000 a payout, between, 2 and 5, 2 and 6. I think I've had a couple of $6,000 or $7,000 payouts with you. And that's probably the top end of it. But, if you're getting 2 of those a week, 2,000, 4,000 a week, and then a 3,000 and 3,000 a week, little wins stack up. And psychologically, it really does help, rather than just to, chuck loads of money at these prop firms and, try and get a $200,000 account and, blow it. And then there's another $1,000 gone. And, don't get me wrong, there's periods where you're having shit luck, excuse me again, but you're having poor luck, and you do put a bit more money than you'd like into these firms to get funded. But again, that kind of boils back to what I was saying before, depending on how much money you've got, as an individual, depends how fast you go into these things. I know people that have, not got too much behind them, and they're at the bottom at the moment, and they're learning things, the trick of the trade and stuff. And $200, £200 is quite a lot to them, and that's great, because they'll have a bit more discipline with the challenges, and they'll carry that into their trading. And then all of a sudden, I've seen people go from 0 to 100 making far more money than I am, and it really does. 6 months can really change everything. And people say this, and it's a bit kind of cliche and cringy and stuff, but it is the truth. All it takes is 3, 4, 5 months of like locking in and executing your strategy. And when you do get hold and you do have a bit of a good run, $3,500 an ounce on gold, people must have made a fortune, an absolute fortune. And for those that are swinging gold, for example, on CFDs, you might have held something for 1 or 2 weeks. And I think gold since 2024, start of this year, I think it's growing up 24%, 25% or something. I think it was about $2,800 an ounce, and then it pushed $3,500 an ounce. So, there's times where, if you are a bit of a swing trader, a position trader, and you want to hold these positions for a long time, stock market as well was absolutely absurd. When we hit 45K on US 30, I think we sold down to about circa 40K. So again, 5,000 points, it's huge, like 10, 12, 11%. It's massive. So NASDAQ as well, I think we hit about 22K, and then we dropped down to, 80 or 6, very, very low. And when you do catch these times of like, geopolitical tensions and, all these kind of, global kind of conflicts and risk event headlines, effectively, there is a lot of money to be made. And if you are patient and you're just taking your couple of $100 a day, intraday, if you don't see too much, or, $200, $300, $400, there are going to be opportunities where you can naturally hit these kind of home runs and, not really risk any more than you're setting yourself up to. And, I didn't. I was unfortunately burnt. I lost quite a lot of money start of last month, I think it was. Start of April, I think it was, when we were starting to see the big corrections and sell-offs. I was trying to catch a folding knife. Obviously, the worst thing you can do. Every now and then it happens. You make loads of money. It was quite a lot of money that I lost to me, but at the same time, it was money that I was willing to lose, and I think that's the difference now. You put a bit of a cap on what your threshold is, what your risk appetite is, and if you lose it, so be it. And that was personal money. I had other payouts and bits and pieces lined up, so the rest of that month was like a bit of a, not damage control, because I stopped trading the personal stuff, but I lost about 15 to 17 grand, about 17 grand I think it was, in about 2 days. And then I was like, right, I've got about 15 grand of payouts lined up, so let's work on those. And for the the next 3 weeks, I'll basically try and get those payouts paid, recover the money that I've lost, and then we'll see how the month goes. And I ended up having about 35,000 USD worth of payouts that month. So I recovered everything I had, and I still was kind of plus 18 or 19 grand on the month. So it's about like damage control and stuff, and I think that's the difference, because what typically happens is you'll have people that do lose a lot of money, and they'll burn themselves out, emotionally, financially, psychologically, and they're never to be seen again. So they're the ones that add to those brokerage statistics of 95% of people lose money with this firm, because it's the same as if you were to open up like a betting account, and then you say, right, I'm going to open up this betting account, I'm going to place a bet, and I lost 50 quid. I'm never going to be seen again, and you kind of your account's dormant. You're adding to that statistic, aren't you? So I think, if you can control your risk and your money and stuff, and, you stay in the game for longer, you still have skin in the game, then, it would be interesting to see the statistics of people that have been in the game for a year, or maybe a minimum of a year to, let's say, 5 years, and what the profitability rate would be for those, because you do get a lot of newcomers that are misled online, and they come in, they've got £500 to their name, they lose all of their money, they're never seen again. So it's unfortunate, but it's the way the social space is. I think a lot of people kind of mislead people for their own financial gain. And
yeah, agreed. Because I mean, even if you look at fraud firm, right? Because a lot of people come in being like 1% of 1% get payouts. Completely untrue. Like some course seller or something told you that to get you to buy their prop course. Completely untrue. Like it is way, way higher than that. Like we're talking well above 10% of people get to payout. And you know what I mean? But people are like, oh, 1% of 1% gets a payout to prop firms. Not true at all. Not true at all. And that's not even individuals. That's usually just accounts, which we know most people go through multiple accounts, right?
Yeah.
So like it is higher than some of the course sellers and stuff out there trying to sell you that. I'd be interested to know too, though. You're right. Like people that have actually been trading for, let's say, 3+ years, right? And have stuck with it. I'd be interested to know that too. Because we know just buy and hold strategies, right? It's pretty much any time after the 3-year mark, you will be profitable, right? No matter where you bought. Like the history is showing that. But I am interested to know just like actual traders. You're right. That would be interesting to know. So talking about making money and stuff there, I know you said you're trading with multiple firms. I had to point out that I was like, yes, you've done a couple $6,000 payouts with us, and the other firms you do like 1 to 2 usually. Obviously good to take small, consistent gains. But obviously our payout policy, the most you would get with another firm there would be 5. When we're talking about it's 6 with us. So that was something that I didn't want to interrupt you. And I was like, that is a nice little thing you can do with us that you can't do elsewhere, obviously. That's something coming into the future space that like I love futures. I traded CFDs because they were available to me in the US for a little while, but futures were always the asset I liked better. The only reason I even jumped over to CFDs was because the payout caps were so low in the future space, and still are, to be honest. Like our $15,000 payout cap, the next closest is 5,000. Like most firms are between 1,200 and 2,400. And then, one of the more popular ones being 5. But like to me, that was just way too limiting on traders. That's something that we kind of obviously broke into the scene as a disruptive model that like, hey, we don't care about being the cheapest, but you can definitely make the most money with us. So you pay for what you get, which kind of rolls me into kind of like why Alpha? What brought you here with us? Obviously, you've done very well with us since, and I'm sure that will keep you around. Like your experience now has kept you around, but kind of why Alpha? Like what brought you to us?
I think, like I say, I've obviously been in the space for quite a while, and I think when Alpha Capital was like first getting off the ground, I was quite in the loop with that, and it was quite early days. I've seen obviously how much they've blown up now. I think there are over 100,000 people in the Discord. I think there was a fraction of that when I first got kind of sight of that. I think Matt or Alex, I think it was. I used to message him on his personal number. And he used to, reply to me and like sort things out. And, there's a few times where, I didn't realize at the time, but there were issues with, data issues and bits and pieces. And there's a few things that I was exploiting, but I wasn't, doing it on purpose. I didn't really know what the crack was. Obviously, you do get market gaps when, stock market will, 10 p.m. UK time, markets open at 11. And there was a bit of a glitch going on. And I was obviously trading that, and then all of a sudden it was something that shouldn't have been there. So I was messaging him, and he was being so fair and so honest. He gave me free resets and bits and pieces, and said, "Look, obviously don't try and do that." And the wider support team, the Discord and stuff, has always been excellent. And obviously with the future side of things, I think by far you've got obviously the best support. So the ticket system, the website, the Q&As, the FAQs, all that kind of stuff is by far the best. And I think that's one of the things. Obviously, like you say, you're not the cheapest, but also you do have, some of the better kind of payout terms. So, you've got bigger drawdown limits. You obviously have a consistency rule. But I'm actually 40%, I think, is a perfect balance. I think it stopped me a couple of times because I misunderstood. Because I had the consistency rule with Alpha Capital, and that's like a collective combined kind of profit. So if you make money but then lose it and then make it again, it's like the total. Whereas obviously with the futures, it's a little bit different. So I had a bit of a misunderstanding with that, but that still got resolved and explained to me really well. Again, my negligence probably, when you're investing in these firms and stuff, you're putting your money, it's your duty to to read the rules and understand it. And there's been a few issues. I think I was saying this before the call, where I had basically done a bit of a soft breach, and I was expecting a payout of about 8,500, which I think was about 6,000 something after the profit split. And I was a bit gutted because it was 17 seconds. I didn't obviously realize it was my fault. You guys provide the service and the rules, and it's my due diligence to, check out and make sure that I'm following those. So the bloke on support, going back and forth with email, he basically explained, and he said, or I asked the question, if I do say, 3 days of $300, that will meet my consistency rule. Will I then be eligible for a payout within the next 2-week period? He said yes, and that was exactly what happened, and I got paid with no questions asked. So, it's never a shady cover up type thing with Alpha Futures or Alpha Capital. Is always very straight down the line, very honest. You guys obviously have to draw a line under the, in the sand somewhere. So, 17 seconds, and it's only a $240 trade. But again, like I say, I'd be exactly the same. You have to draw a line somewhere. Otherwise, you're going to be giving people, there's going to be disputes that could lead to bad feedback and bits and pieces if you've given someone a bit of a benefit and someone else hasn't, and I've heard about that. So very professional. I think, that's certainly the early days of Alpha Capital. And then obviously seeing the future side of things developed. As soon as you were releasing it, I had my eye on you because obviously I was somewhere else. And I think, in terms of, the 3 accounts again with the larger profit splits and the payouts and stuff is really, really good. The consistency rule stops you from trying to get those one-hit wonders. And it does better your trading. I think, having a consistency rule and also having Project X, you are really like kind of setting yourself up for the best possible success. Obviously with CFDs, there's so much flexibility and variety. You can do so well for 10, 12 days and then just blow your account just before payout. And I've seen people do it. I've just said, look, just leave your account, just wait 10 days, get paid. And the temptation is just so high. People just want to throw it back. Whereas obviously with the futures, with Project X, you can put all your parameters in, set your risk appetite, set your loss limits, your profit targets and stuff. And, just chip away consistently. Less is more. And, I've, like I say, having more accounts and being able to stagger those and get multiple payouts a week, it's psychologically is so much better. So, that's how I got into a long-winded bit. Keep going off on a bit of a tangent, don't I? But obviously, I've been around and I've followed obviously Alpha from the CFD space and from the future space, and I'm a big fan. So I've got I've had a lot of experiences through customer support, through the platforms, through everything. Now I'm obviously happy to share, and it's been a good experience. And obviously I'm on this call for a reason, but I'd hands down recommend you to anyone really that's looking to trade futures. I think futures is certainly a better platform and a better route, a better avenue to kind of explore than CFDs. Like I say, having those kind of parameters in place, it's a bit different, but spend a couple of weeks on it, spend a couple of months on it, and go for it. I think people will generally have better support and a better hold and a better grip on their emotions and stuff trading futures as opposed to CFDs. And like I say, you've got all the tools, you're equipped with everything you need to kind of, stop yourself trading on tilt and stop yourself, throwing everything back and wasting your time. And when you do that, when you are so close to a payout, and that is the experience that you have, it really does knock you for six, doesn't it? And, it kind of leaves a bit of a bitter taste in your mouth, and you think, oh, Christ, so close, and you get a bit disheartened, and then, you're back at square one. Whereas the future space, I think, is set up a bit different, obviously, to CFDs, and I think you've got a bit more chance of success.
Yeah, so I would agree, right? Like trading's never easy, definitely never easy, but I think futures does give the average retail trader at least more of an edge just because better platforms, better support in most cases, and then it's actually a better asset, right? Like spreads, market data, it is just generally a better asset. And that's even, I've talked about this before, if more CFD traders actually understood what they were trading, I think they would complain about slippage a lot less. Because if you understand what a CFD contract is, slippage is part of its nature. Like that's why they exist. Futures, obviously, slippage might happen, but that's strictly just because of volatility or the CME putting us in like a pre-open state, right? Or like velocity logic. But like they're not designed around get whatever fill you get, right? Like that's not what futures assets are supposed to do. And I think if more CFD traders actually understood that, we probably wouldn't see as much on social media about slippage because it's like, that is what you signed up for, CFD contracts, So I definitely agree. Like I love futures. Like I said, in being in the States and stuff, there obviously was an accessibility issue for a while there and everything. But like, even when they started adding them back to some like some platforms, I never looked back because I was like, no, futures is where I'm staying forever. I was already kind of balancing both, but it's
Yeah.
definitely where I'm staying. But one thing I want to hit on there that you talked about was like, hey, having the discipline to be able to wait for your payout date. That's something not enough people in the future space, either they're forced that they can't, right? With like 8 to 10 minimum trading days for a payout. That's obviously why we took the bi-weekly approach on the standard account, just because beginner traders, right? The more you make them trade, if they're not at that level of a very successful trader yet, the more you make them trade, the more they're going to lose. So like
Yeah.
forcing a trader's hand to trade more just to earn their profits they've already made didn't sit well with me either. That is why we went with the bi-weekly, only 40% consistency rule there. That was kind of my thought behind it. It was like, hey, if you're a beginner trader and if you have 3 good days to start your account and this is your first payout ever, if you have the patience to wait another, right, 11 calendar days from that point, you deserve it. We're not going to force you to place more trades the way, a lot of firms do. Now, the advanced plan obviously is 5 green trading days to pay out, and that comes with other benefits like no news rule, obviously weekly payouts and everything. But the standard plan was really built around, hey, it's a great plan for any trader. Like I know yourself, you're not a beginner trader, but it sounds like you're trading the standards because that's what you like. It's a competitive plan off the bat, right, with anything in the industry. But I did try to think of the people that have never reached their first payout before. And I think that really reflects in our standard plan. Because again, trading is never easy. Not saying that, but I do think like our standard plan, that path to your very first payout is the quote unquote easiest in the industry. Again, trading is never easy, but I think if you look at our path to first payout versus others, I do really feel like it's much more in the trader's favor, which is what I was going for. But you're right. They need to have the discipline just to be able to wait for that payout date. But I promise we'll make you jump through less hoops than other firms. Like that is 100% true. But with the consistency rules, I kind of, I hated them at first when I came into the space, but to be honest, it was only because I was trading with like a 30% one. I've found 35 to 40% to be when I'm like, oh, this isn't restrictive anymore. Now we've 15, 20, we've been talking about 15 and 20% pop up in the space, and like 30% has gotten really popular too. My personal opinion is that's when trading gets right. You're getting restrictive on the trader. I think 40, 50%, generally in my trading, I've never had an issue with that. I've traded with multiple firms that are 40 and 50. No problem. That is also how we landed on that. I pretty much, years of trading futures, I went to ownership, was like, I think 30% sucks. Like I really do. I think that's just too hard to maneuver. And 40% is obviously where we landed. And I was like, this is fair, right? We're protecting from one-hit wonders, as you said, but it's not restricting to the trader to the point that like, this is so frustrating. So that's good to hear that you feel the same way, because that's definitely what I was going for in the product.
Absolutely. I think you've got obviously unless you obviously also you've also got possibly one of the easiest challenges to pass. So a lot of the time, you've got like you can, I don't know, let's say you're talking futures, you need to make $9,000, but you can only risk 4,000 or 4,500 is your max loss limit. That's like a 1-to-1, and then you've got to get another 1-to-1 the next day. I think if you're doing for example, the 150s. I've got a couple of the 150s done on the verification today, just trying to push those through. And I think, you got $6,000 drawdown, and you need to make 4.5 and then another 4.5. So, you're trying to get like a 0.8R trade, if you could hold a decent position to try and catch that, if you're trying to do it quickly, or if you want to break it down into a couple of trades, you've got more drawdown versus how much profit you need to make. So that's also, a good positive. And I think, you guys compared to competitors, you are right. If you do get your hands on a funded account and, you've got a qualified 100K or 150K, you can simply place those the first 3 trades, make maybe $1,500, get paid, and your drawdown doesn't then go to 100K or 150K. It stays, with that max loss limit, which is good because it means they can go again. It doesn't mean that they're forcing themselves to take a small payout and then really tighten their stop loss because it moves to 100K. So again,
made no sense to me too. Again, beginner trader looking at futures, I was like, why are we punishing people for taking small payouts when that's when you claim what you're about as a firm, a small consistent payout? So overall I agree. I think we've attacked a lot of the things in the industry I personally disagreed with. I'm glad to hear you agreed. I know you do have to hop on another call here, so I don't want to take too much more of your time. But any closing comments, anything kind of maybe wisdom you want to pass on to the audience here? Any tips for beginner traders before we, but I don't want to take too much more of your time.
Yeah, no, like less is more, and I want to try and hold myself accountable now. So I think certainly I said at the beginning of this call, I've been kind of not between, but I've been kind of juggling a bunch of accounts, and with the different rules, it gets a bit of a headache, and you make great success on one, and then other ones suffer. So I think I'm going to really try and focus on getting some real consistency with Alpha, and hopefully we jump on a call in 2 or 3 months or so, and I've got some really good feedback to give back and demonstrate that it's obviously the 5th of May at the 15th of May at the moment. Hopefully June, July time, come end of summer, I'm in a good position. I've got far more than I've made so far. So I hope obviously Alpha stick around. I think they're great, and like I said, I'd recommend them to anyone. I've been following them for pretty much since they started. They obviously do meetups in London and bits and pieces as well. I've never really had the time to do one of those. But yeah, great company. I hope you guys stick around. I think hope you grow as well. I hope obviously you are at the moment, and you're offering new bits and pieces, but. It is great to see. It's nice having a company that you can put your money into. You can follow the rules, and you just know you're safe. You're getting paid. And I think that's a lot of the issues when people do put money into prop firms and CFD firms and stuff, and they spend thousands and thousands and thousands, and then they get to a point of kamikaze trade, and they finally get that home run, and then they get denied a payout. By kind of working with the the future space and Alpha Capital and Alpha Futures. You're covered, you're safe, that, you're not going to get massive trades, but still you've got the opportunity to get there. And $10,500, on your first payout across 3 accounts, you can still make best part of 60,000 USD a month if you max them out. Do you know what I mean? So the potential is there. And the only thing I would say is, as a bit of advice, is just like slow and steady, work in percentages. There's no rush. Like I was saying earlier, literally, you start nailing this now and make small payouts. All you have to do is do it with a bit more confidence, maybe. I think what I'm going to do is, not to go for that payout in that first 14 days. What I might try and do is just compound them for maybe, 2 weeks or 2 payout cycles, and really work on trying to get that scale up and getting those profitable days. So hopefully I can put my money where my mouth is, and I'll have something good to report next time. But no, thanks for having me on. Appreciate you. It was nice talking to you and hearing your side and bits and pieces. And pleasure to finally meet you, because I've spoken to you on the ticket system quite a few times, haven't I? So it's been really good. Thank you very much.
Definitely. Idris, thank you so much for your time, man. And I know you'll do plenty more payouts with us, so we'll definitely have another call in the future. But guys, if you have any additional questions for Idris or any of our traders, go ahead, drop them in the comments, or we'll see you in the Discord. I know we just said we're both over there all the time. If you guys have questions, please feel free to direct them or at me or any of the staff. But we do have plenty of really impressive traders like Idris here in the group that are in there all the time, just talking shop. So make sure to join the Discord, but please hit that thumbs up and subscribe button for us, guys. And I will catch you all in the next trader interview.